welcome to The Trade. Let's get you caught up on what traders are watching out there today. And of course, big moves in oil, jumping more than 3%, rising for a fifth consecutive session on expectations of a widening Middle Eastern conflict that could tighten global crude oil supplies. We've also seen gold jump to hit its highest since the 2nd of August, driven by safe haven inflows, with traders awaiting that key US inflation data this week that could shed more light on the Fed's interest rate cut path. Copper also climbing, traders buying back short positions on the expectations of bottoming prices ahead of a slew of data this week from top consumer China. And the yen down against the dollar in calmer currency market trading as investors weigh the odds of a deep Fed interest rate cut next month ahead of a slew of US economic data. Should also just point out, I got an alert on my phone saying that the Nikkei has actually rebounded all of those losses that it had from that wild Monday a week ago. And Treasury yields have slipped as the market marks time for inflation data later in the week that should be pivotal, of course, for the Fed. All right, let's get into the charts. Peter Maguire from XM joins me. I mean, gold, so many big, bold calls out there. What are you seeing?
Absolutely. Well, good morning, Juliet. I think a couple of things. First off, central bank buying and their appetite has been absolutely overwhelming over the last couple of years. You can't deny it.
Yep.
Secondly, if you're looking at the big derivative houses and the likes of certainly CFD providers globally, a large percentage of their book, or maybe the most active traded asset, is gold. So the appetite globally is immense. Doesn't matter where you are, South America or South Africa or anywhere in Africa or Asia, it's just immense, and certainly India. So that's a good thing. And the price, I got to say, is 27.50 going to be the next handle?
Yeah, well, having a look at your chart there, talk us through the key points you've highlighted.
Well, a couple of things. First off, from a technical standpoint, I mean, it's above all of those moving averages. So your 200-day, your 50-day, and the other chart there. Now, the other line there, I've got to say, it's overwhelming, that upside swing. And I think the appetite is going to continue because of so much uncertainty. Your lead in as far as oil prices and the geopolitical concerns, that's only going to underpin gold. And so I think there's more upside from a geopolitical standpoint. Are we moving into a war in the Middle East? Does that capture more nations? Whose side is each person on, or each player on? And that could be, it could ratchet up very, very quickly. There's that part.
Yep.
As far as Russia's involvement in this, China's involvement, Iran, and so on. So I think it's going to be a very interesting lead up as far as August and September, and that will be dictated as far as, will flow over naturally to price.
Well, also the big moves that you're seeing in currencies as well, mostly stronger against the greenback overnight. Yep. What have you seen in terms of sterling moves?
Well, it's, where it's running at the moment, I've got notes here, it's still 127.65.
Yeah.
And it's choppy. It goes up to that 129, nearly 130, and then it dips back down. So again, it's volatile, and it's great for trading because it just offers so many opportunities, because there's plenty of movement there. That US dollar's coming under further firepower to the downside. We're worrying about what happens as far as those CPI numbers, and how does the Fed interpret that, Juliet? Do we see a 50 basis point cut in September? And all the other central banks playing into the marketplace as well. Of course, Eurozone, Bank of England, are they going to follow suit? So it's a very fascinating market to be involved in, and I think you've got to say, probably further softness for the US dollar in the short to medium term.
All right, well, how does that flow through then into the euro? I did note the euro was rising overnight near $1.930 at the close.
Yeah, that's it.
Yeah.
I think it's probably got a little bit more horsepower, because I wouldn't be surprised to possibly test that 110 sort of level. And the reason for it is that US dollar coming under more pressure. It just seems to be a range-bound trade. And when you're looking at the chart there, I think the overall momentum is upwards at the moment, and it may test some of that 110 sort of level. From a trade perspective, I feel as though when you're looking at the euro, and it's weighted at that US dollar index at about a 61% of that composite is weighed up as just euro itself. And I do think that probably in the short to medium term, if the States were to do a 50 basis point cut, that could be ideal for the euro trade.
Yeah, right. Okay, and the Kiwi, the RBNZ, very much in focus. Are they going to cut?
What do you think? I think it's going to happen.
I think it's going to happen. Nobody pays me, though, for my thoughts, Peter.
I'll pay you.
Let's get your thoughts and where we see the Kiwi move.
Well, a couple of things. First off, it's testing that sort of 60-24 number at the moment, Juliet. I feel as though that it will probably have a rate cut. The overall softness, I think this one will go through and subsequently another 2 further rate cuts by end of year. And I think you probably I wouldn't be surprised to see maybe a little bit of an uptick as far as that in the short run, that Kiwi dollar, and I think the volatility will remain. As you're seeing there, it bounced off that 58 handle, 58.50, and then it's having, I'm not saying resistance there, but there's probably the best part of 61 and a half there. Again, it's dependent upon US and what happens as far as their numbers coming out also this week. And if we were to expect a 50 basis point cut, then that's going to underpin the likes of the Kiwi and probably Canadian and Aussie to some extent.
Yeah, right. Okay, we'll continue to watch. Always great to have your insights, Peter. Thank you so much, Peter Maguire from XM. That does it for this episode of The Trade. Be sure to join us tomorrow.